then a little rotation followed by a trend activity. Those trends are not as significant because if you look in a longer term like this, then basically the whole year was a one long rotation compared to the previous year when there was a trend. Alright, so you can look at it both ways. You can either analyze the whole picture or you can look more into details. So let's go back and let's see what happened. What happened in here was quite a long rotation, then selling activity after the rotation. Then buyers were pushing the price upwards, but what happened is that those sellers who were accumulating their selling positions there in this rotation started defending their selling positions when those buyers pushed the price in here into this area. So what happened was that those sellers started selling aggressively to push the price into a downtrend. And this is where those sellers started making money. Alright, the sellers who accumulated their selling positions there. So this is where their positions started making money. After that, basically nothing really significant happening. As you can see, the candles overlap each other. The prices go upwards, downwards, but there's nothing really significant happening there. So this basically could mean that strong sellers or strong buyers are accumulating their positions in this rotation area. And this is exactly what happened. A long rotation, and after that, start of really strong uptrend. And one thing which usually happens is the longer the rotation, the more volumes got accumulated within the rotation, the more positions got created within the rotation, and the stronger and the longer the trend after the rotation will be. This is really important. So when you see a rotation, which takes a long time, this is a rotation which lasted half a year, then you can expect strong trend development. You don't know if the trend is going to be uptrend or downtrend, but you can expect a trend. Alright, so it's not very wise to trade, for example, the strategies that always aim to the center of the rotation, because the longer the rotation, the higher the probability that there will be a strong trend. Like in this case. That was a crazy trend. There's one more bonus thing. It's not really related to the topic of this video, because this video should be about rotation and trends, but there's one pretty significant thing to notice. And the thing is this gap. Gaps like that usually get filled. I'm not talking about stocks right now, because it's quite common to have gaps like that on stocks, but if you have a gap like that on Forex, which is running 24 hours every day, 5 days a week, then having a gap like this not covered is a strong sign that there will probably be a strong trend. So what usually happens is that the price in the next few days covers the gap, alright? Covers this area. What I mean by covers means that, for example, the price goes downwards and then upwards. So then the gap is covered. There is no hole, alright? There is no gap. But when the gap doesn't get covered in the next few days, let's say in the next week, then you can expect a crazy trend. Alright, so this is just the bonus I wanted to share with you since I saw it right there on the chart. But let's go back into the main topic, which is the rotation versus the trend. Alright, so there was a long rotation from which strong trend started. You can also notice that within the trend there are places with rotation. all right? Rotation in here, followed by a small trend. So you can either look at it as a one strong trend, or if you zoom a little bit in, you can see that there's always a rotation and then trend activity. Rotation, trend activity. Rotation, trend activity. In all those rotations, buyers were adding to their buying positions to make more money from the uptrend. All right? They are not really able to enter their positions when the price is moving aggressively in the trend movement, because it is too fast to enter a big positions, but they can do it in rotations. All right? They can add to their buying positions in those rotations. So what happens next? Longer rotation followed by trend, not really surprisingly. All right, so another case of rotation followed by a trend. If we go further, then you can see new rotation, but in this case, what happened? The buyers weren't adding to their buying positions, but sellers took over, and in this rotation, sellers started accumulating their selling positions. They were accumulating their selling positions for 3 months. 1, 2, 3. All right, 3 months of volume accumulation. When there is such a long volume accumulation, you can be sure that there will be another trend. In this case, strong downtrend. What happens next is a rotation. Nothing significant happening there. It seems that sellers were adding to their selling positions because there was another selling activity there, but there was a rejection of lower prices back into rotation. Nothing really significant happening in here, and again, a long rotation. In case like that, you can be almost sure that there will be another strong trend. Because if you look at the big picture, like this big picture, this long rotation, then this is a crazy long rotation. So currently, what I expect is a crazy trend. A really crazy trend. You can also look at it this way, because there really wasn't any significant trend in this whole area. Yeah, the price goes downwards a bit slowly, but this is nothing really significant. It is nothing compared, for example, to this downtrend or to this uptrend. Alright, so currently it's just a matter of time before strong buying activity or strong selling activity starts. New trend. This is what I expect. I don't know when this will happen. I guess that it must be soon, because the rotation is taking place for a really long time. And I'm pretty sure that the trend will be a killer. It will be a strong trend. Alright, so that's just how markets work. Rotation followed by a trend. Then rotation followed by another trend. Alright, this is what you should look for. When you open any chart, you should always mark the places with rotations and with trends. This is the first thing to look for in any chart. The most important thing for me, even though my preferred method is using the volume profile, this is the first thing I look for. Simple price action and rotation versus trend. Alright? Let me show you very briefly another trading instrument and another time frame, so you can see that the logic is the same for all trading instruments. Doesn't matter if it's euro-dollar or if it's futures or if it's indices. It doesn't really matter, alright? So in this case I picked US dollar, Japanese yen and 30-minute time frame. So those are 30-minute candles, and you'll see that the logic is all the same. So let me show you some examples. For example, in here there's a rotation followed by a trend, followed by a strong buying activity. Then there's a long rotation followed by a strong trend. Then there is a rejection of lower prices, which indicates that the downtrend in this case could be temporarily over. Then there is a rotation and a trend. Then there is a rotation and a trend. Alright, so it's always like this. Doesn't matter the trading instrument, doesn't matter which time frame you use. Alright, so make sure that when you make your analysis, when you look in the charts, you always think in these terms, in terms of rotation and the trend. Always ask whether there is a rotation or if there is a trend. Always ask how long the rotation is taking place, because if there is a long rotation, it's most likely that there will be start of trend. And if there is a long trend, then there will probably be a rotation. And the first sign that the trend is ending is a rejection, aggressive rejection. So if there was a rejection of lower prices, like this one, aggressive one, then the trend most likely ended and there will be a rotation. Alright, so that's how I read the markets, that's how I use price action to read the markets. Those are really the basics and a thing which you absolutely need to know and apply in your trading.